So SpaceX is actively preparing to build artificial intelligence data centers in orbit, literally because the Earth's power grid is just tapping out.
Yeah, it's maxed.
Right. And at the exact same time, you've got Ethereum developers rewriting their foundational code to survive quantum computers that don't even fully exist yet, which is just wild to think about.
It's a massive shift, yeah.
It is. So today we are pulling from a really massive stack of newly unsealed federal charging documents, institutional surveys from Bank of America, and exclusive BlackRock interviews. We're trying to figure out how the world's most critical systems, from domestic security to the global energy grid, are handling this unprecedented stress. So welcome to NovaStream, your 24/7 home for live crypto markets, global financial indices, and breaking news. I'm thrilled to kick off our highlights of the day, and we're really looking at a system-wide bottleneck across multiple industries today. It's forcing some pretty wild innovations.
It really is a phenomenal stack of sources today. Like, when you look at all these headlines in isolation, it looks like noise, right?
Yeah, totally.
Yeah. But when you overlay them, a very clear theme emerges. Legacy systems are breaking down, and capital is just desperately searching for the escape hatch.
Okay, let's unpack this, because I want to start with a legacy system that was severely tested over the weekend, which is domestic security.
Right. The White House plot.
Yeah, exactly. We have these newly unsealed court documents detailing a foiled plot to attack the White House, timed around a major UFC event. According to the charging papers announced by FBI Director Kash Patel, you've got a 19-year-old named Tyson Proper and a Missouri man named Daniel K. Eskridge. They plan to use explosive-laden drones over the UFC arena.
Just horrifying.
Right. The stated goal was to trigger mass panic, funneling the fleeing crowds directly toward snipers armed with AR-15s.
The tactical scope of that intended violence is just, it's chilling. And to really understand the threat landscape, we kind of have to look at the specific motivations that were outlined by the federal investigators.
Yeah, and looking directly at those unsealed FBI documents, and I want to be extremely clear to you listening right now, we are strictly reporting the federal investigators' findings here.
Right, absolutely.
We are not taking sides. We are not endorsing or validating any of this group's political motives.
Right.
Just laying out the facts.
Yeah.
But Proper told investigators the group believed the United States, quote, needed to be torn down so that it could be rebuilt.
Which is...
Right. And the documents also note the group held these really intense anti-Jeffrey Epstein sentiments. They specifically expressed a desire that anyone involved with him, just shouldn't govern the country.
And again, we're just conveying the charging documents here. But what really stands out in the tactical breakdown of those documents is the massive gap between their ideological ambition and their logistical capability.
Yeah, the means to actually do it.
Right. This is a recurring theme today, actually. Intent versus mechanics. The charging documents show these men stockpiled firearms, tactical vests, ballistic plates, but they hit a massive bottleneck.
The drones.
Yes. They completely lacked the multiple drones required to actually execute the core, panic-inducing mechanic of their plot. Eskridge was allegedly just at the stage of conceptualizing how to even build the drones and talking about, breaking into military facilities to source explosives.
Wow.
So the intent was terrifyingly present, but the execution chain broke. Because acquiring that specific tier of dual-use technology is just heavily bottlenecked and monitored.
Thank goodness. It is a massive relief that the logistical hurdles gave law enforcement the window they needed to dismantle it.
Absolutely.
So moving from that sort of domestic friction to a massive shift in global friction, the indices streaming on our channel right now, they are reacting wildly to this tentative framework for a peace deal between the Trump administration and Iran.
Yeah, and this is a structural pivot for the global energy supply chain. The Memorandum of Understanding outlines a 60-day ceasefire to negotiate long-term limits on Iran's enriched uranium stockpile. And in exchange, we are looking at reopening the Strait of Hormuz, lifting the U.S. naval blockade, and giving Iranian officials access to frozen funds so they can eventually resume oil exports.
Okay, but make that make sense for me, though. Because I am looking at our live commodities ticker right now on the stream.
Yeah.
Global oil prices just broke below $80 a barrel for the first time since this conflict began. But if you look at the physical maritime shipping data, only a fraction of the normal tanker volumes are actually clearing the Strait of Hormuz right now.
Right. The physical ships aren't moving yet.
Right. So why is the market heavily rewarding a peace deal when the physical barrels of oil haven't actually hit the water? Are traders just, pricing in a positive geopolitical vibe?
Well, no, they're pricing in the mechanics of futures contracts. Financial markets are fundamentally probability machines, you know? They don't actually care how many tankers are in the strait today. They care about the mathematical probability of, say, 1 million barrels of Iranian crude flooding the market 6 months from now. So when an institution buys an oil contract today, they are locking in a price for future delivery.
Oh, I see.
Yeah. If the framework of this peace deal suggests massive supply is coming offline from sanctions and entering the open market, well, the future value of that oil just plummets. The indices drop instantly because the anticipated supply bottleneck has been cleared on paper.
Even if the ships are literally still moored.
Exactly. I mean, yeah, the market is forward-looking.
So a cleared bottleneck in the old economy means cheaper energy.
Yeah.
But that cheap energy is desperately needed for the new economy. Because while oil is stabilizing, the AI hardware market is experiencing a bottleneck so severe, it's basically breaking historical models.
Oh, the physical infrastructure required to run generative AI is under unimaginable strain right now.
Yeah, we just got this Bank of America survey showing a record 80% of institutional investors view semiconductors as the most crowded long trade in the market.
80%, that's huge.
It's wild. It's like everyone rushed out to buy shovels for the gold rush, right? But now the shovel maker stocks are priced as if they've already dug up all the gold in the world.
That's a perfect way to put it. The valuation metrics are they're entering uncharted territory.
I mean, look at the Philadelphia Semiconductor Index, the
Sure.
SOX. Or specifically, look at Micron and SanDisk.
Yeah.
Micron's trailing 13-month relative strength index, the RSI, is over 90. And for anyone listening who isn't staring at technical charts all day, RSI measures the speed and magnitude of price changes. Anything over 70 is usually considered dangerously overbought.
And Micron is at 90.
90, that is the highest level since September 1995. And SanDisk's RSI is near 99. Their gross margins are approaching 80 cents on the dollar, which is fundamentally absurd for a company that manufactures physical hardware.
Yeah, it's wild. And Gavin Baker, the managing partner at Altrides Management, he has this really compelling thesis on this. He argues this specific AI hardware bottleneck trade is nearing its terminal phase. Well, to understand why, you really have to look at how high bandwidth memory, or HBM, actually functions. AI models require moving just unfathomable amounts of data simultaneously. Traditional memory chips, they just create a traffic jam.
Right.
HBM solves this by stacking memory chips vertically like a skyscraper, with thousands of these microscopic pathways connecting the floors. But it is incredibly difficult to manufacture.
And Micron is completely sold out of their HBM capacity, right? Like SanDisk is sold out for the entire year.
They are,
Yeah.
which creates a fascinating psychological tension for portfolio managers because the demand is structurally sound, sure, but the memory sector historically operates on these brutal boom and bust cycles.
Right, because you can't just spin up a factory overnight.
No, building a new fabrication plant takes years and billions of dollars. And by the time the new factories finally come online to meet today's demand, the market is suddenly flooded with supply and prices crash.
Oh.
Fund managers know this history. They are terrified of getting caught when the AI hardware bubble pops, but they are equally terrified of missing out on the daily gains. Baker notes that many are choosing to take some summer chips off the table, just looking for where that capital should flow next.
So if the hardware bottleneck trade is maturing, where is the enduring value? Like, where do you put that capital if you aren't buying the physical chip makers anymore?
That's the multi-trillion-dollar question.
Right, and we pulled data on this, and the answer is literally in orbit. SpaceX just overtook Amazon as America's 5th largest public company. The stock jumped 60% since its listing, and it briefly touched a $3 trillion valuation intraday.
A $3 trillion valuation for an aerospace company. I mean, that implies they're solving a problem much, much larger than just launching satellites.
Yeah, the catalyst is wild. You have this intense retail frenzy showing up in the Vanda research data, and that's combined with a tiny free float of available shares. But the fundamental driver here is this massive $60 billion acquisition of an AI coding startup called Cursor. It's designed to supercharge Elon Musk's Grok model. And here's where it gets really interesting. Elon isn't just trying to make rockets cheaper anymore. He is trying to bypass the earthly energy grid completely.
This is where the concept of escaping legacy systems really crystallizes. The terrestrial power grid is a massive bottleneck. You just cannot build a gigawatt AI data center in most American cities right now because the local utility physically cannot deliver the power.
Wow.
So Musk's solution is solar-powered orbital AI data centers.
Which, I mean, that sounds like pure science fiction.
It does, but the math suggests it's imminent engineering. We're looking at an initial 150 kilowatts of AI computing power per satellite, aiming for 1 gigawatt per year by late 2027. SpaceX already ordered 20% of NVIDIA's new Rubin chips to facilitate this.
Wow.
Yeah. By putting the compute in space, you gain access to uninterrupted solar energy, so you're bypassing the Earth's grid entirely.
But wait, what about the internal confidence at SpaceX? Because this is a massive pivot.
Oh, it's huge. Baker pointed out that over 10,000 SpaceX employees bought into the IPO, and they haven't sold. They are holding tight.
That's crazy.
Yeah, these are engineers who have had private avenues to sell their equity for a decade. The fact that they are refusing to liquidate signals that they genuinely believe orbital compute is the next multi-trillion-dollar sector.
That internal confidence is staggering.
It is. But, capital is finite. If tens of billions of dollars are flowing into massive raises for OpenAI, Anthropic, and a $3 trillion SpaceX, that liquidity has to be actively siphoned from somewhere else in the financial ecosystem.
Yeah, and you can see it happening in real time on our NovaStream crypto ticker. The momentum in digital assets is totally dragging right now.
Yep.
Like Rick Reeder, BlackRock's global chief investment officer of fixed income, he just announced he is actively cutting his exposure to the iShares Bitcoin Trust ETF. He's rotating that capital into tech, credit, and emerging market debt. Basically, he's funding the AI boom with crypto profits.
And Michael Saylor coined a really highly descriptive term for this capital rotation. He calls it the AI summer.
The AI summer, meaning that all the oxygen and liquidity is just temporarily drained from the room to build out this massive AI infrastructure.
Yeah, it's a temporary capital drain. Even Saylor's own company, MicroStrategy, the largest corporate holder of Bitcoin in the world, they disclosed a minor sale of Bitcoin in June of 2026 to fund dividend payments.
Wow, really?
Yeah, though they definitely remain the largest holder.
Well, I have to challenge the premise of this AI summer, though. Because Saylor and other industry heavyweights like Mike Novogratz at Galaxy Digital, they act incredibly confident that this is just a seasonal phase.
Right.
They speak as if it is a mathematical certainty that this capital will eventually flow back into Bitcoin by year end. But why? Like, if AI is the shiny new toy and it's building orbital data centers and models that write their own software, what if AI just permanently steals the spotlight? Why would hundreds of billions in profit eventually rotate back to a static digital ledger?
It's a crucial question. But if we connect this to the bigger picture, it really comes down to understanding the life cycle of venture capital.
Okay.
The market views this current AI phase as an immensely capital-intensive build-out. Institutions are locking up billions of dollars in illiquid infrastructure and private valuations. But venture capital requires exit events. Eventually, those AI deal lockups expire. Companies go public or they get acquired, and insiders realize massive profits.
Right, they turn their paper wealth into liquid cash.
Exactly. And once you hold billions of dollars in newly realized, highly liquid profits, you face a brand new problem, which is debasement.
Inflation.
Right. You cannot leave billions in fiat currency sitting in a bank account, losing purchasing power. You need a pristine, non-sovereign reserve asset to park that wealth. That is viewed as a tactical consolidation. And it's why Saylor is still calling 2026 the most exciting year in Bitcoin's history.
Wow, even while it's down.
Yeah, because of Bitcoin-backed credit and yield products, once the AI frenzy matures from a building phase into an operational phase, all those profits are expected to cycle back to pristine digital assets.
So Bitcoin's strategy is essentially just to wait out the bottleneck, acting as the ultimate vault for when the AI builders want to secure their wealth.
That's the theory, yeah.
But while Bitcoin waits out the AI summer, there's another crypto asset that is aggressively preparing for the future and restructuring its entire foundation to survive a completely different kind of existential stress. I'm talking about Ethereum and the looming threat of quantum computing.
Oh, this is arguably the most critical engineering challenge in the digital asset space right now, and it gets surprisingly little mainstream coverage.
It really does. We pulled a fascinating interview from Joseph Chalom. He's a BlackRock veteran, and now he's the CEO of SharpLink. And he stated point blank that Ethereum has a cultural and quantum edge over Bitcoin that rivals simply cannot fork. And SharpLink is putting its money where its mouth is. They hold the second largest corporate Ethereum treasury in the world. They generated $11.5 million in staking revenue in just the first quarter of 2026.
Yeah, Shalom is focused on a cliff event for modern cryptography. All of secure communication on the internet, including blockchains, it relies on public key cryptography.
Right.
And it works because it is mathematically trivial to multiply two massive prime numbers together. But it is practically impossible for a classical computer to look at that massive result and reverse engineer what the two original prime numbers were. It would take a supercomputer thousands of years.
But quantum computer doesn't play by classical rules.
No, it uses something called Shor's algorithm.
Oh.
By leveraging quantum mechanics, it can factor those massive prime numbers exponentially faster.
It's terrifying.
It is. A sufficiently powerful quantum computer could break the encryption securing a Bitcoin or Ethereum wallet in seconds.
Wow. So what is Ethereum doing about it?
Well, their response is the Lean Ethereum roadmap and a dedicated post-quantum security team. They are actively baking quantum resistance into the base protocol layer right now, rather than just treating it as a patch later on.
Yeah, Salom noted they have 10 separate client teams working on a coordinated migration targeted for 2029.
And that timeline matters because institutions holding trillions of dollars in assets, they are not going to wait until 2029 to ask about this. They are initiating board-level risk assessments regarding quantum threats today.
Oh, sure.
They'll demand to see proactive, heavily peer-reviewed cryptographic engineering before they deploy serious capital.
So for the listener who is just trying to spot the winner in all this, I mean, every new blockchain claims to have faster transactions or better tech. What does this all actually mean for the investor?
Yeah, Shalom offers a brilliant, actionable framework for that. He outlines 4 specific signals that institutions watch.
Okay, what are they?
First is the origin of foundational research. Is a blockchain ecosystem actively inventing new cryptographic proofs, or are they just copy-pasting someone else's open-source repository?
Right. And the second one he mentioned was the migration of experienced developers, which I thought was interesting because he explicitly warns that looking at raw developer headcount is just noisy.
Very noisy, yeah.
Like you don't want a metric inflated by 1,000 junior coders just launching meme tokens. You want to track where the veteran battle-tested builders are migrating to work on 10-year horizon projects.
Exactly. And the third signal is standards authorship. You want to see if the engineers who are writing the technical specifications, the ones that the entire industry eventually adopts, are native to your ecosystem.
Makes sense.
And fourth is institutional trust. When heavyweight capital needs to coordinate a multi-billion-dollar transaction, who is the default coordination layer for that serious capital?
Yeah, and Shalom closed that thought with a quote that I think just completely reframes how we value open source networks. He said, "You cannot fork a research culture the way you can fork code."
Such a great line.
It is. Anyone can copy Ethereum software repository tomorrow, but you cannot copy the collective brainpower of thousands of researchers actively engineering a post-quantum future.
No, you can't. It creates this intangible, unassailable moat.
So, taking a step back and synthesizing the highlights of the day we've just worked through for the listener, in one day, we've tracked explosive drone plots in D.C. We've watched peace deals reshape global oil flow.
Yeah.
We witnessed the semiconductor AI bottleneck give way to a $3 trillion orbital data center vision by SpaceX. And we've seen the AI summer force crypto to evolve toward quantum resistance.
It's all connected. And for you listening, understanding these macro capital rotations from geopolitics to AI to crypto, that is the ultimate edge in navigating a 247 news cycle without feeling totally overwhelmed. When you see how the constraints in the energy grid directly fund the push into orbital computing, and how the eventual profits from that will seek out digital assets, the news stops feeling like random noise.
It really does. It's all one interconnected mechanism. Which leaves me with a final, lingering thought for you to mull over. SpaceX is building data centers in orbit to literally escape earthly power grids, and Ethereum is restructuring its entire foundation to survive quantum computers that don't even fully exist yet. It makes you wonder what present-day terrestrial vulnerabilities are the rest of us completely ignoring right now.
That is a phenomenal question.
Right. just because we've grown too accustomed to them holding up.
Yeah, that's what every risk manager should be asking themselves.
Well, thank you so much for joining us as we mapped out these pressure points today. Make sure to stay tuned to the stream. Keep it locked right here on NovaStream for your real-time crypto price tracking, our global indices, and live breaking news 24/7. Have a great rest of your day.
Thanks for tuning in. See you next time.